Are we on the cusp of a new wave of AI startups?
I'm not a fortune teller, and any investor that says they are, you probably shouldn't take their money. What I will say is, when you've been around long enough, you observe cycles. Yeah.
Do you still think you'll be doing this in 10 years?
Well, we have to. It's a 10-year fund.
Hello and welcome to the Big Tech Show with me, Adrian Weckler, in association with Square. Today we're going to talk to somebody who has seen success and failure at building and selling companies. Eamon Leonard has made some savvy investments of his own in world-beating tech companies like the unicorn Intercom. Eamon Leonard, you worked as a web developer for years, from a hospice in Harold's Cross to digital media companies. You seem to have a great career mapped out for you in corporate tech at a time just as the sector was booming. But you chose to build a startup. Why did you do that, and how did you get on?
Why did I do that? Well, that's a good question. It's very easy to look back and be able to chart what seems like a very straight path, but you know, when you're in the thick of it, it's anything but. I think it was ultimately I had an early midlife crisis at 29 actually, and
it's pretty young for a midlife crisis.
It is so. Well, it depends on how long you live, I suppose. So, touch wood. I kind of felt dissatisfied with my 20s, and I wanted to make sure I didn't feel the same way in my 30s.
What did you build?
So I built a small dev shop, but we built product for people all over the world. We're a team of 5 or 6 people, and we focused on the kind of hard engineering behind the scenes.
What does hard engineering mean?
Well, at the time, it meant a lot of cloud stuff, which was very, very new and kind of Wild West territory. And anything that's kind of new and emergent tends to be kind of opaque. And
so this is 2008?
2008,
yeah.
9, 10, yeah. And so this is around the time that, of course, you know, the iPhone was just coming out. There was a lot more B2B software being delivered as a service, software as a service, and there was a ramping up of cloud adoption, and so very much the process by how software was built, designed, shipped, supported, and sold was changing dramatically, and it's probably no coincidence that coincided with that really was the beginning of a decade-long bull run in investment, VC investment.
And it was a big success. This was at a time when companies like Amazon were scaling up as well. Big success. Engine Yard came in and acquired it in 2011. You had it for 3 years. Why did you sell at that time?
Well, actually, we had built that product in 7 months, so we were sold 7 months after starting that. Yeah, Orchestra. And that was kind of spun out of the dev shop. And yeah, we had taken no investment. We had bootstrapped from consulting, and
that must have been very satisfying.
It was a strange time, unexpected. You know, when somebody wants to buy you, it's very easy to get sold. You know, it's much harder to try and find a buyer. Learned a lot in the process. Stayed with Engine Yard for 3 years. Led engineering for a while. Then focused my efforts, being kind of like an external face of the company. And had a team of people where we would do what's now called DevRel, or developer relations. Back then, it didn't really have a name, but it was a form of marketing to technical people, community building, even technical sales, but like very hands-on and in person. And
so you stayed at that for a few years,
yeah.
But then you got the startup bug again.
I felt I kind of had gone as far as I could go, and I wanted to take on something big and meaty, and I decided that LinkedIn needed to be tackled, and possibly was a mix of founder hubris and naivety, but we gave it a good go, and built some what now would actually be fairly straightforward to build from a technological perspective. A lot of advances in machine learning, data engineering.
This was called Cohort, and I remember
yeah.
you showing it to me at some conference around the time, and you were very excited about it. You thought that it could change the networking world.
Yeah.
It looked good.
Yeah, I wish it existed. I would use it every day today, and I've said that most days since it didn't succeed. Just having a product that looks good is one thing. Having it working is another, and we had both of those. But like having a clear path to sustainability, never mind scalability with venture backing or a clear level of traction, that's a completely different thing. And I probably had a bunch of other things going on in my life at the time that were points of friction on it, I suppose you could say.
Sure, and we've spoken about that before actually in an earlier podcast. In 2018, that all wrapped up.
Yeah.
What were you thinking at that point? Were you thinking, I'm going to do another startup?
Not at all, no.
No.
I was in survival mode. Just like a turtle, head into the shell and just and that's a common theme. I've spoken to lots of founders that have been through that process, but you come out eventually the other side with the help of friends and family and loved ones, and you find that energy and refocus around it.
And what shape did that refocusing come in?
What shape did it come in? I co-founded a company called Boundless, and this was just before, probably about 8 months before the pandemic, and moved to remote work, and so it was kind of timely because.
And this was and the idea that remote working was on the rise, and that you should be able to work anywhere, pretty much in Europe, right?
Yeah, or anywhere in the world.
Anywhere in the world. Yeah. And what Boundless would do is it would take care of the admin.
Compliant employment.
Compliance employment.
Yeah. So make sure people are employed in compliance with the laws in our country and paid correctly and on time, and their taxes are paid and filed and all that. And so it's not a trivial problem to do.
Was it just a year or two too early from the point of view of the pandemic, or was the timing good?
I'd say the timing was good, because I remember when the pandemic came along and we were still trying to convince some investors that remote work was going to be a thing, and this is at a time where the first lockdown was going to be a week or two, and you go home, people go home for the weekend and come back and you're back in work kind of attitude. Nobody really knew how long it was going to go on. So yeah, I think what the pandemic did was accelerated a lot of trends that were already emerging. But it is interesting to see, I'd say, that pendulum swung too far into like everybody's at home, and now it's kind of coming back. And so wherever it ends up settling, I think remote work is still in a better place than it was 2 or 3 years ago, and it probably was accelerated. But I also don't think we're in a world where every company is even going to have a remote component. It is ultimately up to the leadership of the company to figure out. It
seems that a lot of the big tech companies are dragging their staff.
Well, I mean, they're motivated to do so. Offices aren't cheap.
Yeah, and we can see that in Dublin as well.
Yeah, for sure.
Some of the offices, big companies like Meta, are now actually they're renting part of the buildings that they thought that they would need. They're subletting them out. We're going through a fair bit of restructuring at the moment in the tech industry. I'm going to come on to investments now in a minute, but do you think it's a good time in general to build a startup now?
Yeah, I love a good downturn. It's always
Why? What is it about a downturn that makes it attractive to build a startup?
Well, I mean, if you look at the behavior of both founders and investors in the last 2 years in particular, and it probably coincided with this pandemic happening at the tail end of a decade-long bull run that was driven by advances in cloud computing, that behavior was largely irresponsible. More money went into fewer startups, globally. And founders were saying yes to bigger valuations and bigger raises on shorter timescales. So rather than taking 18 or 24 months between rounds, they might do 6 or 9 or 12 months between rounds. And the leaps between round in terms of how much they were raising were multiples of revenue, if revenue even existed. Never mind the valuation jumps. So at the end of this bull run of a decade or so, we had the pandemic, and this kind of irresponsible behavior from founders and investors that overly inflated valuations, and inevitably, as bull runs tend to do, they come to an end for various reasons. No coincidence that it kind of coincided with the kind of the demise of the pandemic as an emergency and to something that can be managed and controlled, and probably people returning to offices and the dynamic being changed in terms of how people are working and how they're spending money and all that. And so it's inevitable then that when that downturn happens, there's a bunch of churn, right? So layoffs happen, down rounds happen. So companies that raise that, oversized valuations in the previous one or two rounds, they're not unlikely to be able to achieve.
So you're talking about the release here of valuable resources?
Absolutely, yeah.
Okay.
So the release of valuable resources, human capital, probably the most valuable resource we have. Brain power, there's only so many hours in the day. The more you can kind of get people to kind of work together and create value, the more value that can be created economically and socially. I think downturns are always a good resetting when there's been irresponsible behavior. They absolutely suck. They hurt people. People lose their jobs. Investors lose their money. And that's to be expected. They're in the business of risk and managing risk. So, and markets contract. And I think when it comes to innovation, you need that resetting. You need that. If you look at the last financial crisis, global financial crisis, 2008, look at also no coincidence that decade-long bull run in tech came on the back of that. The same thing happened a few years after the dot-com crash. The innovation was very slow. A load of people who were in there to kind of chance their arm and make a quick buck, they left, and the builders remained, and the people who were actually kind of the deep technologists who were trying to start stuff up, they remained. And what became Web 2.0 of the mid 2000s up to you'd probably classify it to the mid 2010s, that started on kind of from the ashes of the dot-com.
So do you think...
I think a good downturn is always great for resetting, and I probably shouldn't call it a good downturn, right? But
I know what you mean.
Yeah.
Do you think that the current contraction, restriction, restructuring, I don't know what the preferred nomenclature here is, do you think that the builders will stay in the ecosystem?
Absolutely, yeah. Because the value is still there. The reason the value is still there is I know you in particular own multiple devices. I don't know how many. It's probably in the tens.
The hundreds.
Right? As long as people own devices and those devices are connected together, there's going to be value to be created, and there's going to be different business models to be sliced and diced in different ways, and there's going to be innovations that don't exist, or they take a number of years to kind of slowly build up, and then it seems like all of a sudden they've come out of nowhere. AI is a great example.
Now, this fundamentally positive attitude that you have toward potential and opportunity in a downturn or elsewhere has served you well in previous iterations. You've had one or two very savvy investments. You were an early investor in Intercom, for example.
Yeah. Still am.
That's a unicorn company. That's a great one to wear on your sleeve. But from your perspective, you must be looking then around the environment at the moment, maybe with an eye to, what a good investment in a startup would be. Maybe you might talk me through what a good startup investment looks like to you at this point.
Yeah, so it really depends on the stage that somebody's investing at. Where I've lived in my career is the very early stages. So literally there's an idea, that idea is manifested into some technology that amplifies some core user or business behavior with a goal to monetizing it. The process by which that happens is quite difficult because there's a lot of experimentation and iteration required. There's a whole bunch of chaos and uncertainty. There's a very high risk bar, and people who invest at that stage should understand what that risk means, but they should also be fluent in the language that exists at that stage, right? How people think, how they behave, how they get stuff done, how they work together as a team, how they take an idea, bring it to life and put it in front of people and sell it. That's a very different set of behaviors to, say, a company that has been through that and they're like 2 or 3 or 4 years into their journey, and they have maybe tens or hundreds or even thousands of people working for them, and doing millions in annual revenue, and they have raised some money. That people that invest at that stage, they're looking at spreadsheets, they're looking at data traction, they're looking at kind of long-term strategy, and where I'm really interested in is that first stage that I've lived in my whole adult career, really, and I think what interests me the most, or what I get excited about the most in founders at that stage, is their behaviors. Because you could just, all technology doesn't create value. It just doesn't. People create value. People create value. People with certain behaviors create value. What technology does is it amplifies those behaviors. I feel
an inspirational poster coming on here. Come on.
But what the technology does is it amplifies those behaviors. If those behaviors are, driven and execution focused, if they have very clear insights and understanding as to a set of problems that exist in a target market, and there's a clear path to unlocking that, and behavior from the founders is all driven towards that, the technology really just amplifies that, right? Whereas if a founding team is missing some of those pieces, then the technology isn't necessarily going to fix it. In fact, in some cases it might actually slow it down, or in some other cases it might go the opposite direction and make it a complete disaster. So really that's at this stage there is nothing else, to no other evidence to go on, right? When you're investing at pre-seed, which is the area of investment myself and my partners are interested in, there is no customer traction. There often isn't really a product. If there is a product, it's like a prototype or a demo. There isn't, numbers to look at, right? The data that you have to go on are the people in front of you who are saying, we're going to do this, here's how we're going to do this, here's why we're the ones to do this, here's why you should believe us, and here's a series of kind of unique insights or experiences that we have that make sure that we're well placed to solve this problem. And crucially, they will say what they're going to do, and then they go and do what they say they do, and then they come back to you and they say, we've done what we said we were going to do, like a month later or 2 months later. Now we'd love your feedback on that. And the more that happens, the more kind of the relationship builds up between investor and founder, but also the level of trust. And I think when you're investing at any stage in from a VC perspective, it is a relationship business, and relationships take time, and relationships are based on trust. And if you see repeat behavior that indicates the ability to execute, particularly with urgency, because that's what kills startups at this stage of life is not what they do with their time, it's what they don't do with their time. And money can solve some of that, but like fundamentally the behavior is they're either going to make the best use of the time that they have or not.
We talk about waves.
That's what you look for.
We talk about waves and trends. You mentioned AI a couple of minutes ago. Are we on the cusp of a new wave of AI startups?
I'm not a fortune teller, and any investor that says they are, you probably shouldn't take their money. What I will say is, when you've been around long enough, you observe cycles and you observe kind of the rise and falls of trends, and things don't necessarily repeat, but they often echo or rhyme.
What do you like as a sector?
Well, so from our perspective, we like Ireland as a sector, the whole island of Ireland. And so when you're focused on a region like that, you can't really pick one particular sector.
So then you're looking at maybe fintech or cloud,
anything that's
software.
tech enabled. But we obviously look for people that have technical capability and expertise, or some other kind of domain expertise relative to the market that they're serving. But when it comes to trends, I think the world kind of got burned in during the pandemic in many ways, but with the likes of crypto and NFT, there was a lot of snake oil going on in there.
Careful, Eamon.
Right.
What?
Somebody go sue
You'll
me?
have all the crypto NFT fanboys after you.
Yeah, well, I mean, it's been proven. So anyway, my point is that there was a lot of hype, and there probably was some substance. And now a lot of that hype has gone away, and what remains are the people who are building. And I'm confident that the people who are trying to push things forward, blockchain technology and related spaces, call it Web3.
And are they investable? Are they the type of people that
I would find it hard to make any investment in that space right now. And I think there's probably a bunch of people struggling out there, but I know there's also a bunch of people that raise stupid money that have literally like 20 years of runway, like that, they'll be fine. But I know
guys who have bought houses for cash on the south coast of Dublin with crypto investments that they made.
So do I. Yeah. and that is really not really. They made their money not on technology but on speculation, which is a very different type of investment to venture. Venture is like, it's long-term speculation, but it's nothing like trading. And the guys who made money in crypto, that's more akin to day trading than anything else, or currency trading.
Yeah. Do you still think you'll be doing this in 10 years?
Well, we have to. It's a 10-year fund. Yeah, definitely. Look, I think the way I think about this is I've built up 20 years of working at the early stage of technology, and there's a whole bunch of potential to be unlocked with that experience. Same for my partner Fiona, my partner Chris. They all have their own respective experiences that they've gained from 20 years of a career. That is like a key to unlocking early stage potential. And I think what we've had in the last few years is a bunch of missed opportunities in the ecosystem on the island, of people who didn't get the right level of funding, or they weren't given the kind of space to experiment, or the right network wasn't plugged in to help them kind of get to the next level, or the right kind of mentorship or guidance or support wasn't given to them, for no other reason other than it either wasn't there or it was looking elsewhere. And I think there's just a massive amount of untapped founder potential on this whole island. And I know this because I'm meeting people like this every day, and I have been meeting people like this every day for 10 years. And so that's why we're doing it.
Quick question: how do you choose a good business partner to invest with?
You mean in the fund?
Yeah,
or do you mean
for
like
yourself?
to co-invest?
You have partners that
yes.
you're investing with. How do you pick? Why'd you pick them?
Well, it starts with, I think, it starts with who they are fundamentally. Obviously, there's a bunch of qualities that you look for, but it starts with who they are fundamentally. And we are as people, we're like the cumulative total of our life experience and the values that were instilled into us, and the stuff we've learned.
I never knew VC investing was so deep.
So Chris, I've known since 2008, and he and I kind of cut from the same cloth in many ways. He also had a small dev shop in Northern Ireland, in Belfast, 2008, 2012, and then he spun out and started working on a product. I was the first investor in that as an angel. And then Fiona has a much more professional career and is definitely probably the most badass out of the three of us. And she spent a long time working in finance, and done a lot of regulatory stuff and management consulting and auditing and all this. And but she also, very interestingly, did a stint as a founder and started an email encryption startup a few years ago. And so we've, I guess, when you're looking for founders or partners in any endeavor, you're looking for complementary overlap, right? Where there are some things in common, but also gaps that somebody else, plugs or covers. And then you're looking for trust and communication, the ability to clearly communicate when times are hard, and those times will definitely happen, whether you're starting a new startup or you're raising a fund or you're taking on some other entrepreneurial endeavor. There will always be hard times. So being able to clearly communicate and give benefit of doubt, all these things that come into normal human relationships apply in these cases, So yeah, I think. So
you're very bullish about the startup potential and ecosystem in Ireland at the moment.
Yeah, I am. Yeah, I think, like I said, downturns are a great time to start. I would encourage anybody out there that is, on the fence about an idea that they have, I'm not sure how to get started.
Should they be
do they need a co-founder? Yeah, we're always happy to talk to people and help them out and make some introductions and give them some advice. And when our fund is up and running, we intend to invest in 40 startups over the next 2 years. So there's always a potential to partner with founders in that regard. But first and foremost, VC is a relationship business, and relationships start by giving first. And so that's the outlook that we have.
Eamon Leonard, investor, startup founder, all-round interesting guy, and Dublin stalwart. Thank you very much for joining the Big Tech Show this week, and that's all we have time for. Folks, my thanks go to Tabitha Monaghan, who produced Conor Doherty, was on video, and Gavin Hennessy did the sound. From me, Adrian Weckler, we'll be back with you the same time next week. Bye-bye.